What criteria makes a good trading methodology? Depends what you're trading. The most important criteria would be data. So I don't care whether you're trading a mechanical based strategy that has no directional bias. So you're trading a straddle, so you're trading long and short at the same time. I don't care if you're swing trading or day trading. If you haven't got the data, so you don't know the past performance of that strategy, in my mind, you shouldn't be trading it. Or at least the people that you're working with have the data and you can access it. Because yes, market changes, market conditions change, but it's a little bit like sailing a ship. You can sail a ship across the Atlantic and the currents will work in a similar way each year, but each crossing will be different because there'll be different storms along the way and it will be a different process. But overall, it's the same idea. So data is important. And then not just saying, right, how does this strategy perform? And then expect the strategy to perform in the same way, but tracking the data forward so that you can see correlations in it. So that'd be number one. Secondly, as I've said to David, be process orientated as well. The way that we operate is we don't blindly just trade directional bias strategies. We will only trade against the trend when the market is in against the trend conditions. So what we will do is we will match the market conditions with the strategy. And what that does, it doesn't mean we have winning trades every time, but what it means is our win-loss ratios tend to be better, but also it gives you confidence that when you have a losing trade, you can say, well, I traded the right setup in the right condition. And what that allows you to do is be a little less uncertain when a trade loses. Because our argument is even the traders that trade mechanically, 90% of them end up using discretion anyway. So they'll trade mechanically, they'll trade a pullback, then they'll see the pullback lose and go, oh, there was a resistance there. So then they don't trade the next pullback wins. And then they're like, do I trade with a resistance or not? And then what they do is they create an element of uncertainty. So we say you might as well bring the discretion in at the start, create a process to it, and then trade the right strategy in the right market conditions. And what that does is that also brings your trade frequency to a nice level relative to what you're doing.